I was warning about the 2008 financial crisis before it happened, which was the case. In fact, I was warning about it very vocally at many of the money shows that I attended leading up to that crisis. Well, I can assure everybody today that the crisis that's coming is going to be far worse than anything that was experienced in 2008. Government debt and money printing is off the charts. I mean, we've never experienced anything like this. In fact, I think about half of the money that the government is now spending is being printed by the Federal Reserve. So it's not really borrow and spend anymore, it's print and spend. And right now, nobody seems to think that this is a problem. People seem to think that we've stumbled on the equivalent of a monetary fountain of youth. People like to call it modern monetary theory, which is we can have whatever we want as long as government prints the money to pay for it, that there's no limit, that government is free as long as they print money. Now, of course, why didn't we realize this in the past? I mean, why have we been paying taxes all these years if all we had to do was print money? After all, the printing press has been around for hundreds of years. And so if we could have whatever we want by the magic of government printing money, what's the point of all of us having to pay taxes? The reality is this is a fantasy that is going to end in disaster. See, there's a big difference between earning money and just having the government print it. See, when people are productive, when they have a job and they go to work and their labor is used to increase the supply of goods or services available to the public, right? You have a job, you do work, and your work either aids in the production of a good that people want or need, or you're helping to provide a service that people need. And in exchange for that help, you get money, you earn money, and now you can use that money to help buy the goods and services that you yourself help to produce, right? And the more productive you are, well, the more you earn, and therefore the greater share of what society produces you are able to enjoy yourself. But when the government just prints money and gives it to you, right? When you have all these unemployed people who are sitting at home just getting a check from the government, they produced nothing. They added no goods or services to the economy, yet they can consume goods and services in the same proportions as if somebody had actually done work and actually been a productive member of society. So what does this do? Right? All this does is drive up prices, because if your work adds to the goods and services, and now you're consuming the goods and services you help create, that's fine. But if now you start consuming goods and services, yet you didn't help create any of those goods and services, you just have more money chasing a diminished supply of goods and services, and prices are going to go up. And they're going to go up like never before. And the irony of all of this is that the Federal Reserve has been promising Americans more inflation. Well, that's one promise that they're going to deliver on. In fact, they're going to deliver on it beyond their wildest expectations. Now, of course, a lot of the inflation that government has been creating since the 2008 financial crisis, a lot of that inflation has temporarily moved into asset prices. That's the stock market, the bond market, the real estate market, the market for collectibles or other things that are in short supply. And so when inflation pushes up asset prices, people don't complain, because the people that own those assets, of course, feel much richer. Now, if you don't own those assets, obviously it's problematic if you want to buy it. For example, if housing prices keep going up and you don't own a house and you want to buy one, the fact that prices keep going up, that's not a good thing. Now, the way the government has offset that is by keeping interest rates artificially low so that people can afford to overpay for houses as the prices keep going up. But again, all of that helps distort the economy and fuel the bubble. The last thing the government wants is for the public to realize how much inflation there is. They certainly don't want bond investors to realize that. The key to sustaining the bubble economy, the key to sustaining massive and unsustainable government deficits in the short run, is artificially low interest rates. And the Fed's only justification for keeping interest rates artificially low is the preposterous idea that there's not enough inflation. And therefore, they need to keep rates low in order to make consumer prices higher. But again, it's absurd to believe that consumers want higher prices. If they really did, then stores would advertise price hikes instead of price cuts. They wouldn't make a big deal about having a sale. They would send out notices, hey, hurry up and buy, we just raised our prices. Consumers don't enjoy increased prices. They look forward to decreased prices. So this is all a ruse, because the government is trying to justify a reckless monetary policy that is designed to protect the government, not the economy or not the people. But we're about to suffer the consequences of all this inflation in a way that's far greater than what I even imagined when I first began coming to these money shows. And a lot of that too has to do with what's happened during the pandemic, which is obviously not an event that I had built into my forecast, but nonetheless is simply accelerating everything that I have been forecasting and will make it worse. Because a lot of people, their initial response to the pandemic was, oh, this is deflationary, right? This means people are not going to have demand for things because they're staying at home. Well, that's true. A lot of people stayed at home, and so they didn't buy as much, airline tickets or stay in hotels, but they had no problem shopping on Amazon. And so it wasn't that demand stopped during the pandemic. It just transferred. Money that consumers weren't spending traveling, they simply spent it on other things. And a lot of people, unfortunately, because of our politicians, a lot of people ended up with more money being unemployed than they had when they actually had jobs. And that was because the government's unemployment benefits were so generous. You had people earning double, and in some cases triple, not working than what they earned when they actually had jobs. And so a lot of this money was spent. In addition, you had a lot of people who were told, hey, you don't have to pay your rent. You're not going to get evicted. So you had a lot of people that didn't spend money on rent, but now had extra money to buy other things. So there was a lot of spending going on during the pandemic. And a lot of that spending was on imports. That's why our trade deficit in goods is at an all-time record high. We are importing more goods than ever before. Our total trade deficit, when you count our surplus in services, is the highest it's been since 2008, just before the financial crisis. And I think within the next couple of months, we are going to break that record. And in fact, the trade deficits were getting bigger even before the pandemic. They just accelerated faster after it, given the bubble nature of our economy.